Hi everyone, and welcome to this week's SOMAX FinTech Weekly Market Insight. Just warn you, I've got a little bit of hay fever. Proves I'm human though and not an AI. So hopefully it should be fine. Okay, as usual, our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone. But yes, I do hope it is for you. And of course, many companies provide leverage, so just be aware because you can lose substantially more than that initial investment that you make. Everything we include in here is just purely for educational purposes, and we're not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, consider the risks involved, your financial situation, definitely your level of experience and risk appetite. And you should only risk capital you're prepared, but more importantly, you can afford to lose. And any doubts whatsoever, seek independent financial advice before you risk your capital. I've so many people come to me for help after they've lost some money. Learn the right way. Come and do a course with us first and then get into your trading. You'll find that it helps you immensely. Okay, so let's have a look at last week. It was a very interesting week. I mean, we had more central banks hiking and one actually cutting rates. Stocks ended their recent rally. They finished the week on their lows, really. I mean, slightly off of them, but not by much. But, they peaked for some of them on Monday and then just dropped bit by bit during the week. And of course, Powell testimony confirmed that there could be further rate hikes to come in the US. Of course, if data, more importantly inflation, continues to be too high. And the Bank of England surprised many, although I did warn in our free daily newsletter that this could happen, if the Bank of England felt brave enough, that was, to do a half point, which is exactly what they did. So if we look at the actual data in the US, let's start with them first. So housing data improved, even though rates are higher. People are just getting used to the fact that they're going to be there and they're going to stay for longer, as I keep warning everybody. And PMI continued reasonably steady. I mean, the service is certainly at 54.1, but manufacturing was lower again at 46.3. So back to Powell's testimony. This included the economy and interest rates, although it was surprising how many questions came up around the vice chair that was looking at the possibility to increase the bank's minimum capital reserve requirements, because that would put pressure on them, because it means that they've got to hold more of that money back, which they can't invest in anything. And that did seem a concern during the grilling of Powell, for sure. And who would have oversight all over that, and lots of other things came out as well. So Powell did, although again I suspect it was probably the banking sector that was pushing the politicians to sort of address that subject, because obviously they're concerned that it's going to impact their businesses. Right, so initial jobless claims was higher, 264,000. I have warned that this is going to be a bit of a pattern going forward, and I really do believe that. Now, if we move on to the UK, inflation's still hot. The Bank of England went big with a 50 basis point increase, and of course there's more to come. Now, retail sales also higher, which again is just demonstrating the resilience of the consumer in the UK. Now, I think going forward there could be a slight drop over the next 2 or 3 months of inflation based on energy prices, because those energy prices are sort of below where the caps was set by the governments to help people back the end of last year and early this year over winter. Okay, anyway, back to the data. So CPI headlines was 8.7% year on year, which was higher than forecast, and an increase on last month. And of course, you know, this is a major concern for the Bank of England. The core came in at 7.1% year on year. Although, you know, PPI was lower than expected. That was down 4.1% year on year. You know, to me, this just confirms my point that it's corporate greed that's keeping inflation high. You know, but again, that's very difficult for governments or central banks to control, as it seems everything is that's based around inflation. So, as I mentioned, retail sales increased. They was up 0.7% month on month and 11.3% year on year. So the MPC did increase rates by 50 basis points. It was a split vote though. It came in at 7-2, but to be honest, that was probably to be expected. The PMIs dropped. Manufacturing again lower, so 46.2. You know, anything below 50 is seen as a bit of contraction. Anything above 50 is growth. And again, the service is 53.7. So we're still seeing that divergence. Manufacturing under pressure, but services doing pretty well. In the EU PMI composite, the rate there was lower at 50.3. That's pretty much it from the EU. There wasn't that much come out there last week, apart from obviously the odd speeches and such like. Okay, so in Germany, PPI came in lower. It was down 1.4% month on month, and it's 1% year on year. Now, manufacturing came in 41, which was very weak. You know, that, I mean, that is serious contraction as far as I'm concerned. But services held up again, 54.1. Although that was lower than the consensus. That's PMIs, obviously. And the actual PMI was 50.8. Now, China, they trimmed rates while everyone else is putting theirs up, only by sort of 0.1 basis points. So that dropped them down to 3.55% as a rate. You know, this is because obviously they're trying to attempt to boost their economy. It's not had the same growth or even the threat of growth that I've seen coming from many other parts of the world, and obviously they want some of that. But of course, you know, with much higher prices, demand is going to drop, and of course that's going to impact them because, you know, they're exports. Canada industrial production fell 1%. Although retail sales improved, that was up 1.1% month on month. The Swiss hiked 25 basis points to 1.75%, so they've still got very low rates. And Japan's CPI core came in at 4.3% year on year, which still sort of makes me, you know, ask the question, why do they insist on keeping negative rates? And then just finally looking at last week, crypto had a great week after BlackRock filed an application for an ETF on BTC, so on Bitcoin. You know, most people would expect it to get knocked back because all the rest have, but BlackRock do have a great percentage of success when they do try to launch an ETF. But it does go against what the SEC and that's trying to do. So it'd be interesting to see what the outcome of that is. Okay, so let's move on. So I'm going to go through it here. I'm not going to go through it on all of the slides like I usually do, you know, when I go into part 2 and all that. So I'm just going to highlight them here because I'm sure you get bored with it. So but it is important because, you know, we do some tremendously great stuff. First of all, of course, there's our daily newsletter, which includes global news, my views, and then, of course, if you want to subscribe, we also offer fresh chart levels and pivot points. And then, you know, whatever level of trading you're at, there's going to be something for everybody. We do one-day workshops, you know, that can be just to help you to decide if trading can be your next career, or maybe you've got some gaps that you'd like to fill in with your trading career, and of course we can help with that. And then we've got 1 week courses, You know, by the end of a week, I can get you feeling competent and confident, making some very good trading decisions, analysing markets, managing risk, helping to manage your emotions, etc., etc. Is it going to make you a trader? No. But it will certainly help me to discover your inner trader if you have one, and build those foundations to help you go forward. And of course, we've got that other 1 week course now, where at the end of it you get a free attempt at the trading challenge to qualify for a funded account. What can be better than that? And then our comprehensive masterclass, accredited course, which is just starting week 2 Monday, is designed to provide you with all the knowledge and trading tools to navigate any market and any asset class. You know, I've traded them all and I trade them all. And then when we move on, trader mentoring. So, you know, I can help you get to that next level, and we can do that time and again if you put the effort in and just listen. Consulting wise, we help when it comes to exposure on commodities and FX. Now, something else we do obviously is, because it's all around education for us as well as trading, is to provide that trader educational content to individuals, exchanges and brokers. If you don't want to go through a course, the question is why not, because I can really help you, but you can just go direct into that trading challenge if you feel confident enough and if you feel that you've got the tools to be able to pass the challenge. And there's a link there for you to be able to check them out. Apart from that, if there's any questions you've got or you'd like to know more details on any of this, then it's info@cymaxfintech.com. And if you'd like to ask me any questions, it's chris.tubby@cymax-int.com.